Hi guys, welcome back. Happy New Year to all of you. I hope it was an exciting COVID-free New Year's Eve for you. Today we're going to be talking about a company that's going to have an IPO during the month of January, and that's called Qualtrics. Qualtrics XM. It will be going by the ticker symbol XM on the NASDAQ stock exchange. Now you may or may not be familiar with Qualtrics. In 2019 they were acquired by SAP for $8 billion. At the time, they were planning an IPO in the range of $150 to $200 million. And just days before it happened, SAP made the bid for Qualtrics. During the summertime, SAP and Qualtrics made the decision to spin off Qualtrics. SAP will actually maintain 80% of the ownership. If you're not familiar with this company, let's just go over it. The idea for the company came from Scott Smith, who was a BYU professor of marketing research. He wanted to create an online survey tool that could handle sophisticated research, but was easy to use. Mr. Smith was working on this project when he was diagnosed with cancer in 2001. His son Ryan was a BYU business student and decided to spend time with his dad. So he left an internship at Hewlett-Packard and joined in on the venture. When his dad Scott had recovered, the two had 20 clients for their research company. Now, in the beginning, this really was more of an academic research project. In 2002, Ryan Smith and Scott Smith, with a friend, Stuart Orgel, founded Qualtrics and initially ran it out of the Smith's basement. In 2010, they had more than 1,000 customers, and they were leading the academic market with Research Core. Up until 2012, the company remained totally private and had been funded strictly by the Smiths as well as Stuart Orgel. Their business continued to expand, and they began to diversify. In 2014, you can see that they had the Customer XM. By the way, XM stands for Experience Management. And they also had the Employee XM. By 2016, their business had grown to $190 million of revenue, and they had more than 1,000 employees. Skip ahead to 2018, where they had $400 million in revenue and more than 9,000 customers. And then when they were acquired by SAP in 2019 for $8 billion, they had $591 million in revenue and 2,000 employees. Today they have 3,300 employees and more than 12,000 customers worldwide, with employees in more than 25 countries. They also have 85% of the Fortune 100 as customers. So just what is it that Qualtrics does? They are a survey company, and they are very good at it. Here are some of the arenas that they concentrate their surveys in. Need to design a product? Well, Qualtrics can help you through surveys to figure out what it is that customers want. Need to keep your customers? Well, Qualtrics has customer surveys to help you do that. Tired of losing good employees? Qualtrics has surveys for that. Products? Yep, Qualtrics has a survey system for that. If you want to acquire new customers or improve awareness and perception of your brand, Qualtrics can help you do that. Now, part of their magic is not just in being able to collect the data, but in the way that they interpret the data and then present it to their clients. So just how much business is there for surveys? Well, as I mentioned before, they have more than 12,000 customers. And the total addressable market is around $60 billion. Qualtrics is definitely the leader in this arena, and they are growing their revenue rapidly. For the fiscal year ending September 30, 2019, they had $532 million of revenue, and then grew that for the fiscal year ending September 30, 2020 to $723 million, which is a 36% total revenue year-over-year growth. If you look at the breakdown of that revenue, you can see their most recent fiscal year shows $535 million of that revenue is subscription revenue, and that is also growing at around 35%. Now, the company is still losing money. In 2019, when they were acquired by SAP, they had quite a bit of net losses. A lot of that had to do with some of the legal process of an acquisition, as well as the IPO that they were doing, and the shares that had to be settled. So they lost about $1 billion. In 2019, that came down to $860 million, and now at the end of the fiscal year for 2020, it came down to $258 million. So why should you be excited about investing in this company? Well, one reason is there are a lot of well-known brands that trust them and their ability to provide actionable data through their surveys and the software support that they provide to make those surveys usable. Before you are some of the companies that trust Qualtrics, and they run the gambit from electronics companies to big box stores to well-known universities, healthcare companies, industrial companies, and food suppliers. Now, here's another great reason to consider buying this stock when it becomes available. The initial public offering is going to go for somewhere between $20 and $24 a share, so the midpoint being $22 per share that you can see here highlighted in blue. This makes the company valued at around $14 billion. Now remember back just 2 years ago when SAP bought the company, they paid $8 billion. If their growth continues on this path, you can be buying into a company that may double or triple its valuation at a very, very inexpensive price. Now the IPO date for Qualtrics has not been released yet, but it is expected to be sometime in January of 2021. I'll keep an eye on that and get an update video out for you in the days leading up to their IPO. This is definitely a stock that I'm interested in though, and I'm excited to share it with you. If you enjoyed this today, please give us a thumbs up, and we'd always love to have you as a subscriber. And until next time, enjoy your investing.